finally the market is repricing silver, trying to find where it needs to be. I don't know where the correct price of silver is, but gold's going to keep rising too. But maybe silver should be 200. Maybe it should be 150 right now. I don't really know. The market is trying to discover what silver should be priced at with $5,000 gold. Like, I mean, gold is going to go a lot higher. I mean, I think 20,000 is, I mean, anybody can just guess as to where this thing is going. But if gold goes to 20,000, which it obviously, look, given enough time, it will eventually be there. But, you know, if gold goes to 20,000 within the next 5 years, let's say that happens, it's not going to happen in a vacuum. It's not really gold going to 20,000. It's the dollar losing a substantial percentage of its purchasing power so that the price of everything is going to go up.
The market is currently undergoing a volatile repricing event, seeking to determine silver's proper equilibrium relative to the new $5,000 gold standard. Whether the metal stabilizes at $150 or $200, this discovery process is essential to correct historical undervaluation. Simultaneously, the trajectory of gold points inevitably points toward $20,000, a target increasingly viewed not as a speculative moonshot, but as a mathematical certainty over the coming years. Peter Schiff, chief economist at Euro-Pacific Asset Management, argues that this rise will not occur in a vacuum. A future of $20,000 gold signifies a substantial destruction of the US dollar's purchasing power, where the currency buys a fraction of what it does today. Consequently, this nominal surge in precious metals will be accompanied by skyrocketing prices for all goods and services. This dynamic confirms that we are not witnessing a bubble in assets, but rather the unavoidable transition to a permanent high inflation reality in which the dollar is radically devalued. Now, we present the clips from PeterSchiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
You know, when people talk about, oh, you know, the cost of living is going up, prices are going up, it's the dollar that's going down. Because if we still had gold as money, if we were still on a constitutional gold standard, prices would be going down. Everything would be getting cheaper, which is exactly what is happening. And that's what used to happen in America once upon a time when we had honest constitutional money. The consumer price index on average fell every year. We had declining prices and we had prosperity. We had a more prosperous society that delivered a more rapid increase in the living standards of the majority of the population back then under a gold standard than we do today. And I was pointing out that, well, you know, central banks are buying gold, they're not buying silver, but silver was cheap. And meanwhile, the industrial use case for silver kept improving. There's more and more demand for silver, and there isn't the supply. And so there's been a big price mismatch going on for years. And maybe a lot of that was speculators who were shorting the market, who are no longer able to do that. But the price was really suppressed for a number of reasons. And I just kept saying, look, you know, just buy it. I mean, people were upset that they thought that it was being manipulated. And I was like, well, don't be upset. Just go buy it. If they're doing you a favor, if they're artificially keeping the price of silver down, they're making it easier for you to buy it cheap. So don't complain about it. Take advantage of it. I would tell my clients that for years to buy silver. So now the market is repricing silver, trying to find where it needs to be. I don't know where the correct price of silver is, but gold's going to keep rising too. But maybe silver should be 200. Maybe it should be 150 right now. I don't really know. The market is trying to discover what silver should be priced at with $5,000 gold, right? But $5,000 gold is a moving target because gold's not going to stop at $5,000, right? Gold's going a lot higher than $5,000. I used to have a $5,000 forecast over a decade ago, but a lot of money's been printed since then. You know, because we kicked the can down the road on a dollar crisis a lot longer than I expected, my ultimate target for gold is now a lot higher than I initially expected. So This is not the end of this thing. We're going a lot higher, and we're just really starting to see the dollar break down. And ironically, the catalyst that has finally accelerated the process is Donald Trump. Donald Trump basically forced the world to act in its own interest sooner rather than later, right? With the tariffs, what happened now recently with Greenland, and the things that he's saying about, how important the U.S. is to the global economy, and how the whole world, it only works because of us, and that therefore we could do whatever we want. This is blowing back in his face, because the world is really pulling the rug out from under our economy, because Trump has it backwards. The world doesn't depend on us. We depend on the world. And we're about to find that out the hard way. Gold is going to go a lot higher. I think 20,000 is, anybody can just guess as to where this thing is going. But if gold goes to 20,000, which it obviously, look, given enough time, it will eventually be there. But, if gold goes to 20,000 within the next 5 years, let's say that happens, it's not going to happen in a vacuum, right? The price of copper is not going to stay at $6 a pound, right? It's going a lot higher too. The price of wheat, the price of oil, the price of everything is going to go up. So it's not really gold going to 20,000. It's the dollar losing a substantial percentage of its purchasing power, so that the price of everything is going to go up. Now, I think gold will go up, proportionally more than a lot of other products, goods and services, but it's going to be high inflation that drives gold to that level. And you're also going to see the U.S. dollar a lot lower relative to its fiat counterpart. So it's going to be in the context of a major U.S. dollar bear market, where you're going to see that kind of appreciation in the price of gold. And it's not going to be just central banks that are buying, but they're going to be buying. They're going to be buying more. But there's going to be a lot of private demand for gold, not just the industrial use case, and I'm talking silver too, but as an investment, as a store of value. Like we haven't seen since the 1970s. You're going to see institutional investors, pension funds, endowments, mutual funds. They're all going to be allocating a portion of their portfolios to gold and silver, to mining equities. Whereas in the past, and including the present, most of these institutional investors have no allocation, zero exposure to precious metals. And so they're going to go from 0 to maybe 5 or 10%, but that is a huge number when you contrast how much that is in totality versus the tiny supply of investable gold and silver or mining equities. And then you're also going to see the retail investor, for the first time probably in decades, getting involved. Sure, there's always been a group of investors, maybe led by me, in recent years, the gold bugs. We've been buying gold and silver. We've been stacking, because the events that are going to be transpiring, playing out, are exactly why I've been buying gold and silver, and other people. It's not a surprise to me that we're going to have a dollar crisis. The only surprise is that we've been able to delay it for as long as we have. And that's allowed me to accumulate a bigger position, particularly in the mining stocks, because that's where I've been focusing a lot of my buying. And I probably would have been just better off sticking to all physical silver, but obviously that's just with the benefit of hindsight. But I've got plenty of silver. I got more silver stocks, which, they're up. My silver stocks are up 5x, 6x. But I actually, if you'd have told me a year ago or 2 years ago that silver would be $115 an ounce today, I would have expected my silver stocks to be at least double, if not triple, where they are right now. So, and I still think they're going to get there. It's just that kind of investors are in disbelief of what's happening, and so they're not pricing it in. I think a lot of people just expect the price to crash, and so they're not going to, start factoring in $115 silver into their earnings forecasts for these companies. But you know what? It doesn't even matter. The silver stocks are priced for maybe $50 silver at most. They're not priced even for $100 silver. So it doesn't matter if silver goes down.
The rising cost of living is not a product of more substantial value, but a symptom of the dollar's collapse. Under a constitutional gold standard, prices would naturally fall, fostering true prosperity. Currently, the market is aggressively repricing silver to correct years of suppression. At the same time, gold's $5,000 milestone is merely a stepping stone toward a much higher target of $20,000 as the currency fundamentally breaks down. Economic policies are accelerating this inevitable transition. Recent aggressive tariffs have backfired, prompting global trade partners to pull the rug out from under the U.S. economy. This emerging dollar bear market will likely force institutional capital, pension funds, and endowments to shift from zero allocation to substantial positions in precious metals. Meanwhile, mining stocks remain absurdly priced for $50 silver, even though the metal trades at $115, creating a massive valuation disconnect as investors slowly wake up to the reality of permanent high inflation. Let's get back to the interview.
The higher the price of silver goes, the more demand there is by investors, right? Investors generally buy things that are going up. And so the investment demand is not going to be diminished by the price. It's going to be increased. People are going to look at the price of silver and want to buy more, right? Because it's going up. I mean, I had a hard time convincing people to buy silver years ago because they said, well, why? Silver's not going anywhere. It's dead. It doesn't do anything. It's just a waste of money, right? But now that silver is doing so well, people want to buy it. So yeah, the high price, you don't get the normal reduction in demand. You actually get an increase in demand. The dollar index wasn't even falling for most of last year. It fell early in the year, but the dollar was relatively stable, yet gold kept going up pretty much every day. And so there really wasn't much of a correlation. But now that the dollar is falling, you would expect the gold price to rise even more because it needs, like, let's say if the dollar goes down by 1%, if gold goes up by 1%, it's actually unchanged for everybody else, right? And so the gold has to go up if the dollar goes down just to stay stable in other countries that are using other currencies. So when you have a weak dollar and the gold is priced in dollars, by definition, the dollar going down means the gold price is going to go up. And so really now you're going to have two factors pushing gold higher. One is that gold's just going up against all fiat currencies, but also now the dollar will be going down. So what this means is the price of gold in terms of euros or, pounds or yen or, other currencies may be going up a little slower or the same speed, same pay. But in terms of US dollars, it will be going up faster because that's how gold is priced. So now we have to adjust gold for the exchange rate. For physical precious metals, physical gold and silver, people should go to Schiff Gold and buy. I mean, gold, I wouldn't even have any nervousness about buying gold at 5,100. I don't know that it's going to get much below 5,000 on the next pullback. I mean, it could go to 4,800, right? But I mean, the support keeps ratcheting up in gold. So I don't see a lot of downside risk in the short run. Silver, look, anything that's moving like this, can you buy it at 115? You can buy it. I mean, I think you'll be ahead, but maybe keep some dry powder in case you get a chance to buy 100 or to buy 9. It's so volatile at this point. But the other problem for silver, and it's why, and I was telling people this when it was 70 and 80, and not say, look, it could pull back, but you have to worry about the availability of the product because we're going to run out of coins and bars, especially these small denominations that people want. So even if you buy silver at 115 and it goes back down to 100, the products could actually be more expensive because of a higher premium, and they may not even be available. So let's say, you wait for a pullback and you go to Schiff Gold when silver pulls back to 100 and we're out of stock of everything. Well, you can't even buy. So what good does it make? You can't buy it. So you'd have to go to a future and buy a futures contract, but that's not the same thing as buying physical. And by the time we get it back in stock, it could be 130, right? So I've been telling people, look, just go to the website at Schiff Gold and just buy whatever silver we got. You'll notice too that certain products are like unavailable. I've never had that before, where all of a sudden we run out of something. So if the particular, coin that you want or bar is gone, just buy something else. If whatever you can get your hands on, buy it. And we're not really jacking up our markup. So you're still getting a good deal from us as far as what we're charging to buy these silver coins and bars. But it's hard. We have to buy them, right? We can only resell retail what we can buy wholesale. And the wholesalers can only buy what the mints are able to supply. And, they're not used to the demand that they're now getting.
Yeah.
I mean, one way the supply is met is with higher prices, right? So, the mints don't need to supply as much silver. Let's say people typically buy $10,000 worth of silver. Well, now they don't get nearly as much silver as they used to, right? So I can supply the guy who needs to spend 10,000 a lot easier because I can give him a third of the silver that I used to have to give him, right, for the same 10,000. But what's happening is more people are wanting to put more money into silver. So that the sheer number of ounces that people want is greater, even despite the higher price. So the supply just doesn't exist to meet the demand.
Silver is defying standard economic logic as rising prices are triggering an explosion in investment demand rather than curbing it. This momentum is further amplified by a weakening US dollar, which forces gold and silver higher to maintain purchasing power parity. With the dollar index rolling over, precious metals are now benefiting from a dual tailwind: intrinsic appreciation against all fiat currencies and the mathematical necessity of repricing against a collapsing denominator. Supply chain realities are now overriding spot price fluctuations. Trying to time a pullback to $100 is a dangerous gamble due to the vanishing availability of physical coins and bars. A drop in paper prices is likely to be met with skyrocketing premiums or complete stockouts, making the metal effectively unobtainable at lower levels. The window to acquire specific products is closing, compelling investors to purchase whatever inventory remains available before the supply chain completely fractures under the weight of monetary flight. Share your thoughts on his analysis in the comments section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.